Everyone knows stocks can fall. But here's the one most investors miss. A safe bond fund can lose you money too, and it usually happens at the worst possible time. Bonds and debt funds get filed under safe and quietly forgotten. Meet Manish and Ritu, same fund, same rate move, two very different outcomes. Manish thought debt simply meant safe. He had money he'd need in about a year, saw a long-duration bond fund showing fantastic 3-year returns, and parked it there, show that a debt fund could only be safer than stocks. Then interest rates rose, the fund's value dropped, and his safe money was showing a capital loss, right when he needed it. He never knew that when rates go up, the price of existing bonds goes down, and that those glorious past returns had come from rates falling, not from any guarantee. Ritu treated the same fund very differently. She knew a bond's price moves opposite to rates, and that a fund's duration tells you how sharply. So she kept her 1-year money in a low-duration liquid fund that barely moves with rates, and when rates rose, her short-term parking barely budged. Here's the one idea that unlocks fixed income. When interest rates rise, the price of existing bonds falls, and when rates fall, bond prices rise. Duration is simply a measure of how sensitive a bond or fund is to that, roughly how much its price moves for a 1% change in rates. The longer the duration, the bigger the swing. So the fix is simple: match duration to your horizon. Money you need soon belongs in low duration or liquid funds that barely move with rates. Only long horizon money should sit in longer duration bonds, where you can ride out the swings and collect the higher yields. And be skeptical of a debt fund's past returns. Big gains often came from falling rates that may not repeat. Because the first question a professional asks a bond or debt fund isn't, "What were the returns?" It's, "What's the duration, and does it match my horizon?" The returns follow from that. This week, look up the duration of every bond or debt fund you own, and write it next to the horizon of the money in it. Any mismatch is a risk to fix. Take your free investor DNA assessment at app.investinsightspro.com. With InvestPro,